Hello everyone, welcome back to Edutap and welcome to today's session. So in today's session, we are going to discuss a very important news article of finance that is regarding the Reserve Bank of India that has issued a new very important framework for the acceptance of green deposits. Now this framework is very important from the objective point of view in the regulatory body exam as well as the descriptive answer writing point of view also, okay, because here you will see the definitions, okay, important definitions has been given in this framework. And what is this complete framework, why it has been issued by the Reserve Bank of India, what is the purpose behind this framework, as well as what is the applicability of this framework, what are the important definitions that has been given by the Reserve Bank of India in this framework. All of this we are going to discuss in today's session so that you have the complete clarity about this framework that is very important from the exams point of view. Let me tell you that, okay. So let's see the complete framework today. Let's have the complete analysis of this framework. But before that, do subscribe to our YouTube channel and join our Telegram channel for the PDF of this session, okay. So now starting with today's news article that is regarding the RBI that has issued the complete framework, the detailed guidelines for the acceptance of the green deposits. First of all, what are these green deposits? See, the banks, they accept deposits, okay. They take the deposits from the consumers and then they give the loan. Similarly, there are the NBFCs. There are many NBFCs, okay. There are some of the NBFCs that are allowed by the Reserve Bank of India to take the deposits. So they also take the deposits and they also do the lending services, or they also provide the loans. So what are these green deposits now? The green deposits are the deposits that the banks and the NBFCs are taking these deposits, and they can use these resources, they can use this money, they can use this proceeds only for the green finance, only for the green finance, that is only for providing the loan for the green activities or green projects. So I hope you have the brief idea that the green deposits are the deposits that will be taken by the banks and the NBFCs, and the deposits, the money will be used for the green finance, the green loan. Now let's have the complete clarity about these green deposits. Now you will have the complete definition. So these are the definitions that has been provided by the RBI in its framework, okay. So starting with green activities or projects. So I hope you have the clarity about the green activities or projects. They are the environmentally positive activities or projects, such as the renewable energy projects, the solar power plant projects or solar energy projects, the hydropower energy projects, the energy efficiency projects, as well as the biodiversity conservation projects or activities, the pollution prevention and control activities and projects. These all are the environmentally positive activities or projects, and these are the green activities or projects. So the green activities or projects, they encourage the energy efficiency in resource utilization. The resource should be utilized at the optimum level with efficiently utilizing the energy also. The efficiency in energy utilization should also be there. The reduction in the carbon emission, the reduction in the greenhouse gases should be there. So the pollution prevention and control is needed. Promotion of the climate resilience, adaptation and value of the climate, we need to do that. Improve the natural ecosystem and the biodiversity conservation should also be there. So these are the green activities and projects, and when we will see the coming slides, we will have the complete list of the green activities or projects that has been provided by the RBI. So in the coming slides, in the paragraph 7, we will see the complete list, okay. I have given you some of the examples so that you have the understanding that these are the green activities or projects that are environmentally positive activities or projects, okay. So now coming to green deposits. Now green deposits, I have told you that the banks, NBFCs, some of the NBFCs, they can take the deposits. So they are going to take the green deposits, okay. Now these green deposits are the interest bearing deposit, because why the consumer will want to deposit the money? Why the consumer will want to deposit the money with the bank or NBFC? So the consumer should be getting some interest. Okay, the consumer should be getting some interest. So the consumers will deposit the money in the green accounts, or they will deposit the money in the green for the green deposits, and this money is the interest bearing deposit that is received by the regulated entity, that is the bank or the NBFC, and this money is for the fixed period. This deposit is for the fixed period. This is the fixed period deposit, the green deposit. And the proceeds, the money that the regulated entity will get, this money that is got from the green deposits should only be allocated, should only be used towards the green finance. Okay, so I've told you that the deposits or the money that the banks or NBFCs will receive in the form of green deposits can only be used for the green finance, that is giving the loan for the green activities or green projects. Okay, so green finance means lending to or investing in the activities or projects that is meeting the requirements of the green activities or projects, that we will see in the paragraph 7 when we will see the complete list. So contributes, so green finance contributes to the environment, to the climate risk mitigation, to the climate adaptation, resilience, other climate related or environmental objectives including biodiversity management and nature based solutions. So green finance means when the banks are lending or when the lending or investment is happening on the green activities or projects. Okay, so the money that the green banks or NBFCs are getting in their green deposits, that money should only be used for the green financing, for giving the loans for these kind of activities or projects. Now greenwashing is also a term that has been defined by the RBI. So sometimes what happens that a company is there that is saying that okay, our product is so environmentally sustainable, it is so environmentally positive, but it is actually not environmentally positive. So that is greenwashing. That means the practice of marketing the product or service as green when in fact they do not meet the requirement to be defined as green activities or projects. Okay, so that is greenwashing. That is, you are cheating the people by saying that our product is environmentally positive, it is environmentally safe, but it is actually not. So that comes under the green washing. Okay, remember the definitions very clearly, you can quote these definitions. Okay, so the RBI has issued the detailed guidelines for the acceptance of the green deposits. So the green deposits can be accepted by the banks, NBFCs. Okay, by the banks, NBFCs, wherein the funds could be used for financing activities, for financing green activities or green projects. Okay, now this framework is applicable to all the banks and all the NBFCs? No, this framework is applicable. So this is the applicability of the framework. So remember that the RBI has said that this framework is applicable to all the scheduled commercial banks, including the small finance banks, excluding the regional rural banks, the local area banks and payments bank. As well as this framework is applicable to all the deposit taking NBFCs. Only those NBFCs that are taking the deposits will come under this framework, because this framework is talking about green deposits. So the NBFCs that cannot take the deposits will not come under this framework. So all the deposit taking NBFCs, including the housing finance companies, will come under this framework. And this framework is going to be applicable, or it will come into effect from June 1st, 2023. Remember the date very clearly. So I hope you have understood the applicability. Now coming to the framework. Denomination, interest rate. Now the green deposits, when the consumers are depositing their money, they will want some interest also. So in the green deposits also there is the interest rate that is there, the tenure is also there. So the regulated entities shall issue the green deposits as cumulative or non-cumulative fixed deposits. So cumulative fixed deposits means that the interest you will get on the maturity with the principal. So the interest is accumulating, it is adding on to the principal, and on the maturity you will get the complete interest, the compounded interest, as well as you will also get the principal. Non-cumulative deposit means that the interest is not cumulative, it is not adding up. You are getting the interest on the regular basis, on the monthly basis or on the quarterly basis, you are getting the interest. Okay, so here is the complete definition that you can read. The cumulative FD means the FD, fixed deposit, where the interest is accumulated or collected till the end of the maturity period, and you will get the complete interest, the compounded interest with the principal. Non-cumulative FD means where the interest is occurring and is paid regularly to the depositor. On maturity, the green deposits would be renewed or withdrawn as per the option of the depositor. Now, I am a depositor and I am quite concerned about the environment. So, I will deposit my money in this green deposit. I am getting interest on this green deposit, as well as it is safe because it is under the bank or it is under the big NBFCs. So, my deposit is safe, as well as I am getting interest on this deposit. Okay. So, now if I want, I can renew this on the maturity period, that this has the maturity period of 5 years, let's say, so, or 4 years. So I will renew it, or I can withdraw my money after the maturity period. Okay, So the green deposits shall be denominated in Indian rupees only. So that is very common because the banks and NBFCs are receiving this green deposit. So it should be only in the Indian rupees. The tenor, size, interest rate and other terms and conditions as applicable to the regulated entity. So the NBFCs, they have to go through some terms and conditions that they have to take the fixed deposits for the minimum period of 12 months and the maximum period of 60 months. Something like that terms and conditions are there for the NBFCs. So those terms and conditions will remain intact. Okay, that shall also be applicable to the green deposits. The terms and conditions that are applicable to the regulated entity for any other kind of deposit should also be applicable to green deposits. Okay, the terms and conditions. Now coming to the policy, so board approved policy should be there. The comprehensive board approved policy should be laid down for the green deposits in aspects in detail for the issuance and allocation of the green deposits. Okay. A copy of the above policy on green deposits shall be made available on the website of the RE. So you have to remember this, that here should be the board approved policy for the green deposits. Okay. Now financing framework. I have told you that the green deposits can only be used for the green financing for providing the loan. Now the banks and the NBFCs, they are receiving the deposits. So they will of course give the loan because on the deposit they have to pay the interest. So they have to earn the interest. They have to earn the interest. They have to pay the interest, so they have to earn the interest. To earn the interest, they will use this deposit to make the loan. So they can only use this money for the green financing or for providing the loan for the green activities or green projects. It means the same. So financing framework should be placed, the board approved financing framework should be placed for effective allocation of the green deposits and for seeing that the green deposits are actually going for the green financing or not. So it should cover all the following details. Okay, that we will understand in the coming slides after we understand the important terminology. Okay, so that we will see, and after that we will understand these following criterias. But you need to understand, for the financing framework there should be board approved policy. Let's see the list that has been provided. Okay, so I was telling you, right, that in the paragraph 7 there is the list that has been provided by the RBI that shows the eligible green activities or the green projects where the money can be used from the green deposit for the green financing, for the providing the loans for the green activities or green projects. So there is the eligible list that has been given by the RBI. So the regulated entities shall be required to allocate the proceeds. So the proceeds or the money that they have got in the green deposits, that is raised through the green deposits, that should be used towards the following list. So the list has been provided of the green activities or projects which encourage, I have told you, energy efficiency, climate resilience and such and such. So this is the complete list, and the REs shall ensure that the funds raised through the green deposits are allocated to the eligible green activities or projects only. So these are the eligible sectors of the green activities or projects, and here the projects or the activities has been mentioned. So the renewable energy sector, that is the green finance sector. So the solar, wind, biomass, hydropower energy projects, such projects, for financing such projects, the green deposits can be utilized. For the energy efficiency projects and activities, the green deposits can be utilized. For the financing of clean transportation, the green deposit can be utilized. For climate change adaptation, for providing the loan or providing the finance for the climate change adaptation, the green deposits can be utilized by the banks and NBFCs. For the sustainable water and waste management, the pollution prevention and control, for the green buildings, for the sustainable management of the living natural resources and the land use, for the terrestrial and aquatic biodiversity conservation. For all of these, the green deposits can be used to finance for all these sectors. Okay, and here are the activities or the projects are being provided. That okay, clean transportation means that adoption of clean fuels. So there should be the project or activity, if the project or activity is happening where the adoption of clean fuels is happening. Okay, so for that the loan or finance can be provided through the green deposits, through the proceeds, through the money that is coming in the green deposits. Okay, so these are the sectors, these are the projects and activities that is under the paragraph 7 that is allowed by the RBI as the green activities or projects that is eligible for the green deposits, that is eligible for taking the loan from the green deposits, or that is eligible for the banks or NBFCs to provide the loan or finance through the green deposits. Okay, So now what are the exclusions? There is the list that has been given for the eligible green activity or green project. So there are some exclusions also, that the money should not go here. Okay, the money from the green deposit should not go here. So the projects that is involving the fossil fuels, so of course this is harmful, this is not green. Green means environmentally friendly, green means environmentally positive. So fossil fuels, they are create a lot of harmful gases, and that's why the projects that is involving the fossil fuels should not be paid loan through the, should not be given loan or green finance through the green deposit. Nuclear power generation, again it creates harmful fumes, it creates harmful gases. The direct waste incineration means that the waste is not being treated, but it is directly burnt or it is directly thrown out, so it is again creating a lot of trouble. Alcohol, weapons and such should not be given loan from the green deposits. Renewable energy projects that is involving the protected areas. Now protected areas, there should be the minimum interference from the human beings in the protected areas, that's why they are the protected areas. Now we are trying to create projects in these protected areas or from these protected areas, so that should also not happen. So the renewable energy projects generating energy from biomass using feedstock originated from protected area, so this is also excluded from providing the loan under the green finance through the green deposit, so that should also not happen. Landfill projects, again it is harmful for the land, because there is too much of the waste that is being dumped on the land, or inside the land it is filled with the dump. Hydropower plants larger than 25 megawatts. So these are all the exclusions, that is the green deposit should not be used for these projects for providing the loan. Okay. So now third party verification or assurance and impact assessment. So third party verification and assurance means that the third party should be involved to verify that okay, the money that is going from the green deposit is actually going for the green finance or for loans, that is for the green activities or green projects. So the third party verification and assurance has to be done. Okay, so the allocation of funds that is raised through the green deposits by the regulated entities during a financial year shall be subject to independent third party verification or assurance, which shall be done on the annual basis. So the funds are allocated to the green finance only through the green deposits, that has to be checked by the third party. Okay. So the third party verification or assurance report shall at the minimum cover the following aspects, that is the use of the proceeds is in accordance with the eligible green activities or projects that we have just seen. Okay, so these are the eligible activities and projects. For these only the money should be allocated. The money should be allocated from the green deposits to these eligible green activities or projects. The REs shall monitor the end use of funds allocated against the deposits raised. So it is the responsibility of the banks and the NBFCs that if they are raising the green deposits, they should utilize this green deposit to pay the loan, to give the loan to only the eligible green activities or green projects, that is for only the green finance. Okay. Policies and internal controls should be there. Okay, policies should be laid down, the board approved policies, and the internal controls should be there, that actually the right thing is happening or not, including the project evaluation and selection. Now if we are saying that okay, give the loan to the green activity or green project, so even if it is loss making, even if there is no vision, no idea, just someone is saying that okay, I want to create a solar power, should the loan be given to that person? No, there should be a vision, there should be some idea, there should be the business capability of that person, some previous experience of that person, that should be seen, and the project should be evaluated, that this is like cost benefit should be seen, the cost benefit analysis should be seen, and then the project should be evaluated and then selected. Then the finance should be given to that person, that actually that person has the clear idea that what it is he is or she is going to do with that loan for the environment. Okay, management of the proceeds, the money that is coming in the green deposits, that should be managed properly. Validation of the sustainability information provided by the borrower to the regulated entities, the regulated entities has to check that actually the information that is provided by the borrower is correct or not. Okay, and reporting and disclosure has to be made by the regulated entities, and this all has to be verified and assured by the third party and the independent third party. Okay. So now coming to the impact assessment. So the impact assessment has also been made. Impact assessment means that there are the impact indicators, that how much of the renewable energy is being created, how much waste management is happening, how clean transportation, the new clean transportation infrastructure is being built, or how much of the greenhouse gas emissions is being avoided through this project. So the impact assessment has to be done of the green activities or the green projects for which the loan is being disbursed by the banks or the NBFCs. So the regulated entities, with the assistance of the third party, independent third party or the external firm, shall annually assess the impact associated with the funds that is lent out, the loan that has been provided for the green activity or green project in green finance activities or projects through an impact assessment report. So the impact assessment report has to be made, and these are the impact indicators. They show that, okay, how much the impact has been made. So impact assessment report has to be created for the loans that has been given for the green activity or green projects, that how much impact the green activities or green projects are creating. In case regulated entities are unable to quantify the impact of their lending or investment, that they are not able to quantify that how much of the total renewable capacity has been made, or how much greenhouse gases has been reduced or such. So if they are not able to count that, if they are not able to quantify that, they have to disclose at the minimum the reasons that why they are not able to count or why they are not able to quantify the data. Okay, the difficulties encountered and the time bound future plans to address the same, that how in the future they are going to do the impact assessment. So if they are not able to do the impact assessment, they have to give the reasons and how in the future they are going to do the impact assessment. Considering the fact that the impact assessment is an evolving area, and the regulated entities, that is the banks and the NBFCs, they will need some time for this impact assessment. They will need some time to understand this impact assessment. For the current financial year, the impact assessment is on the voluntary basis, but from the next financial year 24-25, the impact assessment has to be done on the mandatory basis. The regulated entities shall place the report of the third party verification and assurance and impact assessment report on their website. Okay. Now coming to the financing framework back. So the board approved financing framework policy should be there, covering the following. So the financing should be done. The green financing or the loans for the green activities or green projects through the green deposits should only be done for the eligible green activities or projects that we have seen in the paragraph 7. So the proceeds, the money, the financed out or the loan should only be given from the proceeds of the green deposits if it is the eligible green activity or project. So this is under the financing framework. The process for project evaluation and selection by the regulated entity should be shown. Okay, that how this project has been evaluated, why this only project has been selected. Okay, out of the 20 projects, why you have selected these 4 projects only, including identifying the projects fit for lending or investing within the eligible categories, monitoring and validating the sustainability information that is provided by the borrower. That the borrower has said that this is my vision, this is my idea, this is my previous experience. So is this correct or not? Okay, and what information the borrower is providing. The allocation of proceeds of the green deposits and its reporting has to be done. The third party verification and assurance has to be done of the allocation of proceeds, that the proceeds are going to the right place. The green deposits, the proceeds, the money from the green deposits are going to the right place or not. The impact assessment has also to be done. Okay, that we have already seen when we saw that what is the impact assessment. Okay, the particulars of the temporary allocation. So what happens that when the loan for the green finance, when the green finance has to be done, so this is a permanent allocation, but there is no good project that is coming up. So what the bank will go do with this green deposits? So they can do the temporary allocation of the green deposits, and that should be maximum original tenure of 1 year. Okay, so the banks can use these green deposits to buy the securities that are up to 1 year, maximum up to 1 year. Okay, not more than that. So this is the temporary allocation that the banks can do, NBFCs can do if they are not finding any good project or they are in the process of selecting some project. For that time period, they can invest the money through of the green deposits to some liquid instrument. Okay, of green deposits proceeds pending their allocation to the eligible activities or projects, if the pending of the allocation is happening to the permanent project. Okay, the copy of the financing framework specifying the above aspects shall be made available on the website of the RE. So now coming to the last para of the framework, we can say reporting and disclosure. So the review report shall be placed by the regulated entity before its board of directors within 3 months of the end of financial year. So when this financial year of 24, that is 2023 24, this financial year will end, then after within 3 months the regulated entity has to provide the review report. Okay, that should have these details, that how much amount was raised through the green deposits in the previous financial year, that is like after this financial year end, the financial year 25 will start. So in 3 months of this financial year, the report has to be provided for the previous financial year, that how much money was generated, list of the green activity or projects where the money has gone to, where the green deposit money has gone to, the amounts allocated to the eligible green activities or projects, that how much money was given to a particular green activity or project, and such and such. A copy of the third party verification and assurance report and the impact assessment report has also to be provided in the review report in front of the board of directors, that will be placed in front of the board of directors. So I hope you have understood this. RE shall make appropriate disclosures in their annual financial statements on the portfolio level information regarding the use of the green deposit funds. Okay. So why it has happened? Okay, why the RBI has to bring this framework? Because the climate change is a very big problem. The environment is being harmed. Okay, so the financial sector can play a pivotal role, can play a very important role in mobilizing the resources. So that's why the green deposits, this will help the financial sector, the banks and the NBFCs to get the funds, to mobilize the funds, to collect the funds that will be used for the green financing, that will be used for the green activities or projects. So their allocation thereof in green activities or projects. It is seen that some regulated entities are already offering green deposits for financing green activities and projects. Taking this forward, the framework has been made for the acceptance of green deposits. So there is a particular way for the banks to work. Okay, otherwise the banks will be doing whatever they want. So there should be a particular framework, that how the banks, how the NBFCs should work. So that's why this framework for the green deposits has been made, so that the banks are able to mobilize more resources and put these more resources for the green financing. So the purpose and rationale for the framework, RBI said, is to encourage the regulatory entities to offer the green deposits to the customers. Okay, so the customers will be able to deposit their money in the green deposits. The customers will be getting the interest, as well as the customers will be happy that okay, we are doing something for the environment, because these deposits will directly go for the green financing, for the green activities and projects. Protect the interest of the depositors. Now the customers have a safe option, they have a safe deposit, we can say, which is directly helping to the environment. Okay, so they do not have to take the risky step to help the environment, to directly invest in some particular company. Aid customers to achieve their sustainability agenda. So this customer has some agenda that I want to provide for the environment, so the customer is able to do so. Address the greenwashing concerns. So the banks will be able to do the checking, the evaluation, the banks will be doing the assessment, that the banks will be doing, so the borrower cannot cheat the bank. Okay, because the bank will be very thorough, there will be independent party also that will be evaluating and doing all such things. So the greenwashing concerns can be reduced. Okay, greenwashing we have understood, when the person is trying to cheat by saying that I am producing something environmentally good, that is not actually environmentally good. And help augment the flow of credit to the green activities or green projects. Okay, so the flow of credit will increase to such activities and projects. So this is the first question. I hope you will be easily able to answer this question. You have to tell the incorrect statement here. So this is the second question. Again, you have to tell that which of these are excluded from the list of allocation of proceeds. Okay. So this is a big announcement from our side, that we have brought for you the comprehensive guide for RBI, NABARD and SEBI, so that through a single guidebook you can get all the common queries answered. If you want to know about the examination, that what is the pattern for the exam, what is the syllabus for the exam, what are the previous year cutoff for the exam, all these common queries can be answered through a single guidebook. You do not have to visit different links, you do not have to visit different websites. Okay, and if you want to get if you want to know about the organization, if you want to know about the preparation also, all the information, all the common queries can be answered through this single guidebook. So do download this single guidebook, and let me tell you that this is absolutely free of cost, to save your time, to save your efforts. So do download the guidebook. The link is given in the description box below. So now thank you very much. If you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.